Good day, everyone, and welcome back to another episode of A Lawyer and a Policy Analyst Walk Into a Bar. This is episode 4 of season 6. This one we're calling Social Insecurity. We're talking about national insurance sustainability in the Caribbean. And, we're going to discuss some of the social security systems in the region, especially in the wake of COVID-19, the pandemic, and perhaps shed light on some importance of having a more robust system in the region and to see ways that persons can truly benefit from having social security. Like I said, especially in the wake of COVID-19, I think we're able to see some of the shortfalls in some of the nations in the social security. So we're just gonna have a little discussion about that, probably talk some importance of reform, the different benefits, things like that. But it's just Delan and I today, and so Delan is gonna be the one spearheading this more so. We've been down for a few weeks, but we're back and we thought that this topic would be one that would interest persons, especially across the region. So we'll get into it, but as always, I'm the lawyer, Jadrick Cummings.
And I'm Delano D'Souza, the policy analyst. And yeah, Jadrick, welcome back. But we've been out for a good few weeks, boy. I had COVID. We had crop over. It was a rough couple of weeks, or a rough last month or so, boy. COVID licked me up bad. It was a tight period of time, and so we kind of fell off. So again, apologies to our listeners, our viewers. It's been a little rough. We had a little rough patch, yeah. But like Jadrick said, we're talking. Yeah, man, we're talking social insecurity. We're really asking the question, is our social security systems in the region sustainable? And when we talk about social security, we're really talking about the national insurance institutions across the region. And that's important, given, like Jadrick said, COVID-19, the aftermath of COVID-19, and particularly in terms of changes. But even before the COVID-19 pandemic, Jadrick, social security systems in the Caribbean were in need of reform, and this has been something that we've been speaking about for years and years. Our policymakers have been, trying to spearhead and try to increase the sustainability and improve the sustainability of the national insurance schemes, services, systems. Some of them are called the Board of Insurance, Board of National Insurance Boards. So there are different names across the Caribbean. Yeah. So as payouts have really started to threaten to eclipse contributions. And of course, when we talk about that, we're talking about in terms of the benefits and other expenses of the national insurance institutions. And of course, the primary revenue for the national insurance systems is contributions by workers. So really, we have in a situation now where payouts in terms of the benefits and other expenses are threatening in some instances to eclipse contributions, and in some instances they've already done so. So right now we have in some countries we actually have contributions being less than payouts, which of course means that there are serious concerns about the long-term financial viability of the national insurance authorities across the region. So as usual, we are going to zone in on the state of affairs of national insurance in some select Caribbean countries to provide insight into what is really at this stage developing. It's almost become a perennial problem at the Caribbean, Jadrick. And of course, we're doing this because we simply do not have the time to speak about every country. So we're going to pick out some, and we're going to discuss, the state of affairs in terms of their national insurance. And we hope that it brings some understanding to you, our viewers and our listeners. Now, in recent years, Jadrick, there have been several studies that have called for substantial changes to the existing systems to address the long-term financial viability and really to widen the pool of active contributors. Now, the issue of sustainability continues to be hotly discussed. In Barbados this week, boy, they had big passa. They had the opposition and the prime minister sitting on one stage having a press conference, and that don't happen regularly. They're really trying to come together to address the issue of the sustainability of the national insurance in Barbados. And so when you see that happen, it's serious business. And this is really because the reserves of several funds across the region are really being depleted with each passing year. Now, of course, it's a thing that we've started being kicking the can down the road, Jadrick. It's kind of saying, boy, it ain't empty this year. So let me keep things the way they are. And of course, it's a very political topic as well, because it involves the electorate, it involves voters, and so that's never easy for governments to come with policy with respect to that. Now, the actuarial reviews and financial statements of the national insurance institutions across the Caribbean, they really make for grim reading, Jadrick. I recently wrote a paper on this particular topic, and going through the actuarial reviews, boy, everybody's saying that things wrong, that a lot of these funds are going to be depleted in the next 10 to 15 years. And of course, for young people in particular who are paying into the fund now, there are real questions into when I retire, is there going to be funds to fund our pension and so on? And it becomes a very hot button topic. Yeah. So several of the actual reviews show that the expenditure has either already or will soon exceed contribution income and total income. Now, it's important to note in terms of the income of the national insurance services, it's really contribution income, and then there's other income. So, for example, they have interest income, they have investment income, because obviously they would use the funds that they have to make investments and so to earn revenue. So it's the contribution income and other income. Some national insurance across the Caribbean, they have buildings that they rent out, and so they might have rental income and all of that. But really, we tend to speak about the contribution income, the returns in terms of the investments, and we add those together to form the total income, really, generally. So as we when we have expenditure and contribution and benefits payout, exceeding contribution income and total income, what starts to happen? Now, it's simple maths. What starts to happen is that the reserves have to be used to fund benefits payouts and other expenditure. Now, the aim really in terms of the system, they're really supposed to be pay-as-you-go system, where really the contributions that are being put in on a monthly basis, they are supposed to be used to fund benefit payout, to fund pensions, to fund other payments, and so when that does not happen, then you cannot pay the people. Pensions that have to get paid every, so what you have to do then is that you have to dip in and start using your reserve funds to pay benefits, and that's not supposed to be the case. It's supposed to be a scenario where money is coming in the form of contributions. You're using that money to pay out in terms of benefits, and the hope, as it used to be back in the day or years ago, you used to pay benefits from the contributions and you used to still have some left back, and that's how we built up the reserves over the years. So whenever the contributions exceeded the benefits payout, then you would have money left back, which would then be funneled into the reserve account, and that's how we have all these billions of dollars in terms of reserves now. So
it's a situation where the ideal situation would be that the benefits, like you're saying, the contributions would be enough to cover the benefits. It's not a situation where, say, I might be jumping ahead, but to say, let's try to boost investment so that we could begin to cover these things more, rather than raising the contributions by employers and employees, because nobody would want to see them paying out more towards the scheme, right? So is it a case where even if you were to probably diversify your investment portfolio to try to boost that, like it still wouldn't be enough? Or is it a situation where inevitably we'd get to the case where we have to increase the contributions that are being paid?
Well, it depends, because different islands, different countries, their NIS are in different positions. So, for example, St. Lucia, I think, is the most financially viable out of the Caribbean in terms of what I've looked at. So their funds are set to expire or be depleted in like 2057, which is very far. That's what their last actuarial review would have said. Now we have some being as warnings of depletion as early as 2029 for some other countries, but.
I think ours is less than that, right? That's ours. I mean, St. Vincent.
Well, from the last actual one, and I think there may have been one that's been done later than this. I think the last one I saw, there were warnings of 2026, and I don't know if you know, in relation to St. Vincent, they've recently changed the structure in terms of government pensioners, and they're trying to grandfather out some people and make changes with respect to that, and that is in recognition of what's happening in terms of the reserves. But in terms of the investment income, that's been one of the calls that a lot of the actuarial reports have been asking for, to change the use of the reserves. Try to find more investments with higher returns and that sort of thing, to try to minimize the extent to which you have to increase contribution rates and that sort of thing. But it really depends on what's happening there and the extent to which you're able to earn. But for many countries, it's kind of almost gone beyond that now. If you're looking across the region, they've either done one of two things, and we'll speak to this in a little bit. They've either increased the contribution rates or they've increased the retirement age in terms of when you become pensionable. And that's really been in response to what we've been seeing here. Yeah, and it's difficult to start to deal with that. Yeah, so like I said, what happens now is that you start to use your reserves to pay benefits, and that's what you don't want, because of course you start to dip into the reserves and the reserves start to get depleted. Now, obviously, in terms of where we are as a region, I've spoken about where different countries are, Jadrick. So there was a 2016 IMF paper, very detailed, brilliant paper there, a working paper done by the IMF, and I did some subsequent research after that as well, as we were discussing before we started recording. And the different NIS or the different national insurance are in different positions. So for example, Barbados, I think there was a press conference this week, and the actuary for the NIS in Barbados says that there's a worry that the fund could be exhausted by 2034, or between 2034 is the pessimistic and 2041 is really the optimistic. So that's something, unless there are changes made, the fund could be depleted by that. I think in the case of Barbados, the fund now stands at just around $4 billion. But of course, the concerns in terms of the change in demographics and so on, things which we'll discuss in a little bit, are really exacerbating the situation there in Dominica. The last actual review that I saw put the exhaustion at 2045, and of course 2045 seems a way away, but the way things are now and the way things are changing. But interestingly, the actual reviews usually put forward three important metrics. One, the point at which contribution income is going to be exceeded by expenditure, and when total income is going to be exceeded by expenditure. Now, if the contribution income is if expenditure exceeds contribution income but not total income, then maybe you have the opportunity to pull from interest income and other income that apart from contribution income. So you're still not in such a terrible position. But when your expenditure exceeds total income, that's when the fund is really going into a terrible state. Yeah. So for Grenada, last actual review I saw exhaustion of the fund 2035. I know that there were some actual reviews now being undertaken, and the results of those have not been published yet. So these may be as late as 2017, 2018 in terms of and 2016 in some cases, but it's still cause for concern. Yeah. Right. The 2016 actual review for Jamaica, which I think is the latest one is currently ongoing for Jamaica, and it's supposed to be released either later this year or early next year. But that last actual review set the exhaustion of the fund at 2037. Again, not too far away. Yeah, and 2029.
And the thing is, with these reviews being obviously pre-pandemic, I can imagine there's worry now that even after the pandemic, then a lot of the statistics would change drastically.
Yeah, and that's why a lot of the countries now are fast-tracking or really putting effort to get these updated reviews done. So, for example, Barbados would have paid out $150 million in terms of unemployment insurance from their fund during the pandemic, which is crazy money to have paid out compared to before where they were paying less than around $50 million per year, and in 1 year they paid out $150 million. So basically 3 times what they would usually pay. So of course those are conversations that are ongoing as well. But I think a lot of the governments recognize that now you need updated actual reviews, which is quite important. In the case of St. Lucia, they did a recent one, their actual review, and like I said, it's around 2050, around there. So St. Lucia currently has the most viable one in terms of their latest actual review, which I found interesting. Not just so, but and this one has, and I also, in terms of my research, one of the things I noticed is that they actually updated internally sort of the outlook for the fund after having paid out, I think it was, how much did they pay out? At least 70 million. They paid out a lot of money in terms of the unemployment benefits during the COVID-19 pandemic, but they said that it didn't affect the viability of the fund to the extent that it affected other countries. So that was interesting to note with respect to St. Lucia. So St. Lucia's national insurance is pretty much in terms of in the best shape of what I've seen.
Right.
Now, St. Vincent and the Grenadines, the last one I saw 2026, like I said before. I know I think there might be a new one being done now that might be released soon. So if anybody's looking at that and say, oh, that's old data, don't come for we haven't seen the new one. They haven't put it forward yet. It's not publicly available. So we could only use the ones that we have available to us in terms of for public consumption. For Trinidad and Tobago, the 10th actuarial report, which was released in 2026, put the expiration of the fund, the exhaustion of the fund at 2035. All of that to say, Jadrick, is this is 10, 15 years from now that we could be, unless changes are made, unless things, there's some amelioration of the situation, that these funds could well be exhausted, and that brings into serious, spotlight. It spotlights really, can we now, given that we're paying, and it's mandatory, if you ask me if I want to pay NIS, I might think twice, but it's a mandatory something. And you don't know whether or not money is going to be available to fund your retirement, because in 10 to 15 years, Jarek, we still in retire. We have not hit that. We have not hit that age to be pensionable as yet. Of course, you could argue that there are interim benefits in terms of whether it be sick leave or other benefits that you would pay out that are available to us before becoming pensionable.
Retirement.
But the point of the matter is, you people feel hard. There's a lot of trepidation as to what's really going on with this thing. Is there going to be money to fund my retirement and fund my pension? Yeah. And that was really meant to be a big part of the background, Jadrick, in terms of why we're discussing it. But for our listeners, a lot of our listeners might not be familiar, particularly those who are listening in the US and so, who might not be familiar with the social security systems in the Caribbean. So we're going to basically go through an overview of the system. So social security systems across the region, they're very similar, as you know, Jadrick. We've seen them, St. Vincent thing. They're very similar in terms of their setup. They're broadly designed along the lines of a scale premium, partially funded benefits model. And I spoke to that before in terms of the contribution and how it's supposed to be used and so on. These schemes are sort of premised on the pay-as-you-go assumption that the current contributors generate the resources required to pay the benefits. And that's what I spoke about just now. And the current contributors will generate the resources required to pay the current generation of pensioners and beneficiaries. In other words, the contributions are supposed to be able to cover that. You ain't supposed to be using the reserves to pay out these benefits. So contributions usually take the form of payroll taxes paid by both employees and employers, as you know. So you might 10% might come out of your salary, your employer matches that with 10%, or they might pay different percentages, different contribution rates based on the country in which you're living. And of course, employers typically pay a larger share than the employee. And that has other ramifications in terms of labor economics as well, which we're not going to necessarily go into, because we're talking about increasing contribution rates. But we also recognize that if the employer is paying more, that might have some consequences in terms of hiring and labor policy and labor practices, because of course it's not just an increase for the employee, it's a larger increase for the employer, because they tend to pay more in terms of percentages when you talk about the country. Self-employed contributors also pay directly into the scheme. In some countries, this is mandatory. So once you're self-employed, by law, you're supposed to be paying into the fund as a self-employed individual. That is a problem. A lot of persons don't actually adhere to the law in the countries where it's mandatory. In other countries like St. Vincent, for example, it's not mandatory that you pay in. It's a choice that you have as somebody who's self-employed. So while there's slight variations between the countries, generally earnings for the purposes of determining contributions, they tend to include your overtime, your shift pay, your bonuses, your hazard pay, your holiday, your commissions, and most other allowances. So you can't run from it. In other countries, a few of them, you could structure, or your employers could structure your pay package in such a way that it's really only on your direct payment in terms of your salary, and your allowances do not count as part of the calculation. But generally, most countries include all of them in terms of how they calculate your NIS. So contribution rates are...
Well, I was gonna say, given that contributions are a significant part of that, right, of the scheme, and like you say, what's important and what we should be relying on in terms of paying out the benefits. What are some of the different rates, contribution rates in the region?
Okay,
Like the total, and maybe even broken down to the employee and employer contribution.
Well, I can try to do that for you. So, from my recollection, so the contribution rates in the system, it varies. So, let me start with A. Antigua and Barbuda, the employee, 6.25% is what the employee pay. The employer pays 8.25% for a total of 14.5%. Yeah. And I want to point out that obviously it's different. So some countries have higher, some countries have lower. The self-employed individuals in Antigua would pay 10%. Which of course is slightly more, because if you're an employee and you're only paying 6% and you're self-employed, you're paying 10%. But it's still lower than the total that the employer and the employer would split, which is 14.5%. In the Bahamas, the employee pays 3.9%, the employer pays 5.9%, for a total of 9.8%, and the self-employed person would pay 8.8%. In Barbados, which is the highest contribution rate in the region, and of course, this is of particular consequence to me because I live in Barbados, and right now they're talking about increasing NIS, and I already feel like my eye getting joke out every month. But we can stay there. So the employee pays 11.1%, the employer pays 12.75%, for a total of a whopping 23.85% in Barbados. It ain't easy out there, brother.
Yeah. And no, that's a lot. That's a lot.
It ain't easy, brother.
As an employee, I'm accustomed to paying out my little 5.5% to the employees.
Yeah.
To think I have to pay out
12.75, brother. It's rough. It's rough.
That's rough, yeah.
Yeah, man, and the self-employed person would pay 17.1%. Now, in Dominica, it's 6.25 for the employee, 7.5 for the employer, for a total of 13.75, and self-employed persons would pay 11.4%. Now, Dominica has an additional element. I can't remember what you call it. I think it's a redundancy. They have a redundancy fund that is, I think, is 1.5% that you pay an additional, and that's included in here in terms of that 13.75. But that redundancy fund is unique to Dominica, and I think one other country has that redundancy fund. So basically, if you are laid off as an employee for the purpose, if you are made redundant, there's a fund available to assist you, or to help pay you off, and so on, which is interesting. But of course, others have argued that fund could be better used in terms of how. But we get there as well. So Dominica has that. Grenada, 5% employee, 6% employer, 11%. Interestingly, in Grenada, the self-employed individual pays the same 11%. So of the total. In most other places, you will see the self-employed person paying less, but in Grenada they pay the same amount as the employer and the employer put together. Jamaica, 3% apiece. Employee 3%, employer 3%, for a total of 6%. Self-employed persons pays 6%. St. Kitts Nevis, 5% employee, 7% employer, for a total of 12%. Self-employed individuals pays 10%. St. Lucia, 5%, and this is interesting because St. Lucia is still so viable despite having such a low contribution rate, because it's 5%, for a total of 10%, and then the self-employed person will also pay 10%. St. Vincent and the Grenadines,
like Grenada.
Yeah, so St. Vincent and the Grenadines 4.5. I missed that, boy. I remember working in St. Vincent and 4.5. I smiled, man. I smiled. If you want to get 4.5%, that's sweet. For the employee, 5.5 for the employer, and I know you're familiar with that because as an employer, that's not bad at all, for a total of 10%.
But then, I mean, and now I'm looking at the others, or now you're telling me about the others, like in Barbados, and so I am relieved. There's only 5.5.
and interesting. And the thing about that now is when you hear it in the context of our NIS not doing as well and wanting and the funds being depleted quicker or at a faster rate than other entities and other NIS across the region, you kind of see why. And for me, Barbados, because the rate is already so high, it's difficult for me to start to reconcile how much more you want to go up, brother. I could see why St. Vincent might want to increase slightly, because at 4.5%, 5.5%, and then the salaries in St. Vincent are already lower than the regional than its regional counterparts as well. So if you're doing a lower percentage of a lower salary, you ain't really collecting the money there in terms of contribution income for NIS.
Right.
So you could see why they might want to boost that. Trinidad and Tobago, recently, I think a couple of years ago, Trinidad and Tobago increased their contribution rate. So it's 4.4% now for employee, 8.8% for employer, for a total of 13.2%. Self-employed persons.
There's a big gap there compared to the others in terms of employer contributions.
Because it's doubled, which I found interesting in Trinidad. Yeah. It's doubled, so it's you double it. The employer is supposed to be double what the employee pays, and I think that might have, like I said, that might have implications in terms of labor economics and hiring policies if things were to change. But that's how it is in Trinidad, and that's a recent change too.
And self-employed for Trinidad is how much?
11.2 for self-employed persons. All that to say, when you look at the region, bro, it's very, you can see the countries that have the higher cost in terms of the NIS and so on, you can see, but it's always good to put this in terms of a regional context, and that's an important thing to discuss. In terms of benefits.
But on Barbados, right, which I guess you're going on to, like in terms of Barbados, theirs being higher, they have certain benefits that other countries don't have.
Yeah, Barbados, some, because, not just in terms of the categories of benefits, but also in terms of the payouts, in terms of the benefits themselves, the dollar value attached to the benefits.
Right, okay.
So Barbados tends to have slightly, and of course, that is a consequence of the cost of living in Barbados being higher. So it's impossible to give people 500, 600 EC dollars and convert that to Bajan and tell somebody go live off of that. It ain't gonna happen. Yeah? But in terms of the benefits, generally, employees are generally entitled to benefits of maternity, sickness, invalidity, old age, employment injury, as well as a funeral grant and assignment of a survivor's benefit. Self-employed contributors are generally entitled to all of the benefits except employment injury, which I kind of found curious. But that's just how things are done across the region. Barbados and the Bahamas are the only two countries which offer unemployment insurance. So when you lose your job, you can file for unemployment insurance, and I think in Barbados, what is it, 3 months? You got up to 3 months, you were able to collect 60% of your salary at the last time of employment. During the pandemic, they would have increased this, I think, to 6 months during the pandemic. Right. And of course, in terms of the Eastern Caribbean, St. Vincent, St. Lucia, Grenada, Dominica, St. Kitts and Nevis, all of those countries would have instituted temporary unemployment benefits during the pandemic, which they have now, in many instances, have now stopped. Some of them had to pass legislation in order to allow for the payout of unemployment benefits, because it's a new category of benefit that's not on the books permanently. And after the experience of COVID-19, some of these countries are actually now undertaking studies, and some have already done it. In the case of St. Kitts, for example, they actually had consultants prior who came in to kind of evaluate whether or not they should introduce a permanent system of unemployment insurance, because that's really the gold standard. Because unemployment insurance provides a certain level of social security in terms of losing your job and the ability to transition into other employment and so on. That you don't see, and we see it in Barbados, and in Barbados we're blessed to have that.
And also it's like a standard thing, like in America,
America and so on, the more developed countries, because that's what we're supposed, as we get more developed, the aim or the hope is that we're able to offer these sort of benefits to our people in terms of unemployment insurance, for example. Of course,
especially after the pandemic, especially, I think a lot of persons would be like, why isn't this standard?
Why isn't it standard practice?
Able to benefit from something like this?
But when you say
how drastically that affects everyone.
When you say A, you have to say B, because you can't get unemployment insurance. Watch Barbados' contribution rate. You can't get unemployment insurance without increasing the contribution. So people can say we want the unemployment insurance, but are you willing to pay the additional X amount of percent to get that benefit? Yeah, and that's
and then when you're fussing too, like, okay, we don't need it after all.
We don't need it.
COVID-19 was a
one in a century type thing, and that's where we are. So there are also, in this whole thing, there are insurable earnings caps. So, for example, in terms of how they calculate your pension and all those sort of things, there are caps in terms of that. The statutory pensionable age and life expectancy also vary by country. and several countries have made changes in terms of their statutory pensionable age in recent years, including St. Vincent and the Grenadines. So increasing life expectancy and rising pension payments have forced countries to increase this statutory pensionable age. And really, what you now see typically, Jarek, in Barbados is 67 years old. You have to work until you become pensionable. Madness. And what's interesting again, Barbados has the highest contribution rate, but they also have the highest statutory pensionable age. So you know the NIS in Barbados is in bad state because they already at 67 in terms of when you become fully pensionable. Whereas in Dominica it's 65, in St. Vincent 65 under certain circumstances because they've changed the law and they're now grandfathering out some people who've been in there for some time. Exactly. St. Lucia 65, St. Kitts and Nevis, which I love, 62. Grenada 60. I was in Belize the other day, Jadrick, and if memory serves me correctly, one of my colleagues there was telling me that their retirement age is 55. Still 55.
Yeah. Still 50. I always used to be 55.
Years ago, brother, when we were young, and things keep going up. But in Belize, I'm told, if I remember correctly, it's still around 55, which is brilliant. Cause after past 55, I really want to work now. If I do a little consultancy here and there. If I do a little consultancy here and there, brother. But I mean, I'm living in Barbados, and even if I move back home to St. Vincent, 65 and 66. But as I should also say that sort of underscores the importance of retirement planning, because if you finish working at and there's currently a gap in Barbados, if I remember correctly, where a lot of persons actually leave jobs at 64. And I think even where my employer, we have that issue now where a lot of our people retire at 64, but then there's a 3-year gap between when they become pensionable from the NIS. Because it's 67 is the statutory pensionable age. So there are those issues there as well. So it really highlights the importance of retirement.
What you mean in terms of like employment contracts?
Yeah, employment contracts, and some individuals say when you have to retire by based on thing, if I remember correctly. Right. So there's that issue as well. And I think the 67 was something recent as well. That's just, Right. But boy, when I tell you, it ain't easy, It ain't easy.
Yeah.
It ain't easy.
That's why a lot of these insurance companies as well are trying to like introduce these pension packages so that persons could, benefit in some way, even if they don't. Well, not that they don't qualify, but just in these little short gaps that they have.
I mean, Jadek, you said about something that don't qualify now because remember in this thing there are minimum number of contributions that you have to make in order to become pensionable. Yeah. So you can't just start working at 66 and work for a year and feel you're getting pension. They have different requirements in there as well, and I'm not going to go into it, but there are also caps in terms of a maximum insurable earnings per month. So in St. Vincent, $1,600 US. In Barbados, in Dominica, it's $25.92, and so that also changes in terms of the maximum amount of your salary that can be insured, or that counts towards your pension as well. So all of these are nuanced and different across the region. Suffice it to say, though.
But now you're talking about the benefits. I think you're talking about the qualifying for the benefits. I think the only one that you get immediately is the employment injury. Like you don't have to make a certain number of contributions before you qualify. But I think as soon as you begin employment, you can.
But I think that might be in St. Vincent as well. So that.
But in St. Vincent,
it changes from country to country. So it's all the way out there, brother. It's all the way out there. So why are there challenges to the social security sustainability? Because we're talking about social. We call the episode social insecurity. We're asking, are we socially secure or are we insecure? But why are we having these challenges, Jadrick? The first one is a change in terms of population demographics. And when we talk about that, we're speaking about things such as age, gender, the makeup of the population in other ways. So in many countries, you're actually seeing a reduction in terms of birth rates. So, some countries are even seeing negative, where their populations are declining. Migration is a factor as well in terms of people leaving. And there are in many countries more deaths than births, like I said, declining birth rates and all of these things. So what ends up happening basically is that, of course, based on how the system is supposed to work in terms of active or current contributors are supposed to pay the money that you're generating from that is supposed to pay the benefits. But if you have more retired persons who are older, more mature persons in society who are now claiming in terms of benefits and pensions and so on. And you have a declining number of persons, young people who are working, then obviously there's a mismatch between contribution income and benefits expenditure. And that's really what you're seeing as one of the big causes, particularly here in Barbados, in terms of that the change in demographics. That's a factor, but it's not alone. There are also, and the government has always come forward and talking about, the change in demographics are a big reason why, they almost make it seem like if it's the sole reason as to why the national insurance systems are in the state that they are. And they ain't gonna take no blame, a lot of them don't. But the other big problem that we have in the region is that government, in terms of their usage of the funds. So, for example, government paper, in terms of, when I talk about government paper, I talk in terms of the bonds and other financial instruments that are put forward by government. The NIS tends to hold a large percentage of this government paper in terms of the financial instruments put out by government. And in many instances, the national insurance government paper makes up a significant amount, or the largest share of national insurance investment portfolio, and it's really 36% on average across the region. And this was according to the IMF study in 2016. Now, in 2016, for example, Belize held 4% in terms of government paper as a percentage of their overall investment portfolio. In Barbados, however, in 2016, 68% of the portfolio was government securities, and again, that's according to the IMF report. And at the time, the Barbados NIS officials said that the suggested prudential limit for government securities was 54%, which means that they acknowledged in and of themselves that they were operating above prudential guidelines, and that the agency's own target, the NIS's own target, was 60% at the time. So obviously, the challenge that we have, and persons might say, well, why is it bad if the NIS invests in its government portfolio and a lot of its government paper and government your financial assets and so. But what happens is that returns on these investments may be below more productive use of the reserves. In other words, you could possibly be earning greater returns elsewhere.
Right.
It must be noted that the regulations in some countries prevent or limit large-scale investment of NIS reserves outside of the country. So there are some countries that say, here we're going on, you had to invest the NIS reserves here. We don't want it too far abroad, and so there are limitations on that. A lot of the sentiment around that has started changing now, recognizing that there are greater returns to be had outside of the country. Yeah? But in addition to that, an important thing that the IMF would have also highlighted is that the share of total assets held in the bank deposit raises concerns about the potential systemic financial stability. Now, if the NIS is holding money within the country, or its reserves within the country, where they holding it, Jarek? In the bank, more than likely, right? So if they're holding $4 billion or $2 billion or how much ever, because it's a large amount of money in terms of reserves, if they're holding it in the bank, in the Eastern Caribbean Currency Union countries in particular, the IMF noted that these deposits are held almost exclusively in banks, in locally incorporated banks, which are heavily exposed to the government and the asset side of the balance sheet. In other words, you have the NIS funds in there in terms of your liabilities, in terms of, because obviously the bank balance sheet assets liabilities. So you have, in terms of your liabilities, significant NIS reserves in your bank.
Right.
On the asset side now, you have significant amount of government loans on your balance sheet. Yeah? So what it really means is that the NIS overall exposure to the government could actually be higher than reported, and it raises potentially systemic financial issues in terms of stability, particularly in the OECS and the ECCU countries. That's what the IMF noted, and I could completely see that, because again, you have government paper. In terms of, you have a lot of government paper on the NIS books, and at the same time, the NIS reserves is in the bank, and at the same time, the banks are highly exposed to the government in terms of loans and so on. So, potentially,
right.
We hope that these things don't come to fruition, but the IMF was simply highlighting the potential for negative fallout there. Thirdly, the NIS reserve funds are typically used to pursue development objectives in the areas of housing, health, tourism, education. Just again, how much time you hear the comrade, or you hear Skerrit, or you hear, some other Caribbean leader, you hear, how many times have they come forward and say, well, this project is being funded by NIS funds. Yeah. Are they borrowing some money from the NIS? Correct. Are the NIS investing in XY? Are the NIS doing this? Are they taking X amount of money out of the NIS and they're going to repay it over the course of 5-10 years? What have you? The governments have been using the National Insurance Fund Reserve in many respects in terms of pursuing their own development objectives. So this often means that the NIS is earning below market returns on the government loans and projects. And I have to talk about this because in many instances when the Prime Minister called the NIS director and say, hey, I want X amount of millions to borrow now, the NIS director can't really say no, you know. Because we know how the things set up in the region, Jadrick. When the big boy call you, when the big woman call you and say, listen, we need some funds on the NIS. Even if, in your estimation as NIS director, you don't think it might be a good move, or you feel like if the NIS is earning below potential. And so I'm not saying that these NIS directors or whomever don't push back, but you also have to remember who appoints the members in terms of the board of the NIS as well. Right. You know, the government tends to appoint. So it's a slippery slope. So what you tend to see now is, and many persons have been complaining about this, myself included, that the government's they just dipping their hand in the NIS when they feel like, and then all of a sudden when things started go wrong and things started to get depleted, we started sitting on one and we said, boy, we're going on. The NIS reserves depleting, and then they can come to intelligent people in the region now. You can come to the electorate and say, well, boys, because the population demographics changing. Yeah. As if that's the only reason why the NIS are in the state that they are. When over time, you know, a lot of the NIS reserves are being used for things, you know, that are earning below market returns in terms of the government loans and the projects. Now, I'm not knocking in terms of, you know, realizing that it's a quote-unquote cheap source of capital or cheap source of finance for government projects and development projects, some of which we really need. But at the same time, you know, it's sort of hypocritical in one way to be, you know, knocking the NIS in terms of it's sort of putting forward this narrative that the NIS is unsustainable. At the same time, as the government, you're contributing to the reduction in terms of the funds and the reserves as well. So that's a big issue there for me. Fourth, the NIS administration cost in the Caribbean is an average of 15% of contributions, and this is an IMF figure. Basically, in terms of the administering the fund itself, the salaries, other IT infrastructure, building infrastructure, and so on, in terms of the administrative costs of operating the NIS institutions on a day-to-day. In the Caribbean, it averages 15% of contributions, which is a lot. Because when you compare this to what is approximately 0.8% in more developed countries, you're talking less than 1% in developed countries compared to 15% on average in the Caribbean. That says a lot. And the IMF basically said that this is due to a lot of inefficiencies and a lack of technological use in the Caribbean. So we could do a lot better in terms of how we distribute our funds, how we do this, how we do X, Y. People don't have to be printing this. We don't need as many staff as we do. That's a big point of contention as well. Correct. A lot of our NIS in terms of the region, we're heavily staffed. Yeah. Hundreds of people working NIS and so on. When really a lot of the things that they do could be automated. Yeah. And that's one of the criticism. Because of course, when you talk about the depletion, and we spoke about it before in terms of the contribution, earnings, and we talk about other income, but in terms of the expenditure, we're talking about the benefits expenditure and the other expenditure such as administrative costs. And if the administrative costs are too high, then that contributes to the rate at which the reserves are being depleted. So that's another factor in terms of what we're talking about there. Fifthly, increases in the benefits over the years. So over the years, new benefits have been added. So we talk about unemployment insurance. Some of these have been added, and we've also seen increases in terms of the dollar value of existing benefits as a consequence of inflation and other things. Because of course, you know, the benefits that you pay out have to make sense in the context of your economy. So we've seen increases there. But these increases have not always been matched by increases in terms of contributions, in terms of dollar value, or increases in terms of contribution rate. And I can speak to the Bahamas in particular, because the Bahamas would have added unemployment insurance, I think at least in the last decade or so. And that increase in terms of the unemployment, adding that new benefit, was not matched by a significant increase in terms of the contribution rate. So you could tell there what happening. Yeah.
So imagine it's just sometimes a case where you want to increase the benefits or increase the different types of benefits that you offer, but it might not necessarily match the actual science behind it in terms of whether they can afford it. But you want, because it's good to have.
Yeah, and it's politics too, brother. You want to be the politician who increase NIS benefits, but you don't want to be the politician that increase the contribution rates.
Yeah.
That's how it is. You want to give them more, but you don't want to come out and say, well, you can get his unemployment insurance now, but we had to increase the contribution rate. So it's a politics involved in there as well in terms of how these things go, because invariably this comes down to the government of the day. And finally, another big reason for the depletion of funds and why the sustainability is under question is low participation of self-employed individuals. Now, increasingly, and particularly over the last 5 years or so, a lot of the Caribbean countries are faced with a growing informal economy. In other words, persons are working, they're not registered for PAYE, they're by the side of the road selling things that they get in barrel, they're at the side of the road selling fruits, vegetables and so on. They're informally employed in many respects, and they're not paying either self-employed insurance, national insurance, or they're not paying as an employee, because in some instances we have persons plying their trade in the informal sector that have employees now, but they're not going to register as an employer to pay NIS on behalf of the persons that they employ. And because of the growing size of the informal sector, that presents challenges, particularly in the context of those countries where it's not legally required for self-employed individuals and those operating in the informal sector to contribute to the National Insurance Service. And then, of course, other persons might say, even if it's mandatory, how you can go out to Middle Street in St. Vincent, or you can walk to Market Street in Antigua and say, listen, all of y'all need to go pay NIS. It's difficult to enforce that. How you can walk to Halfway Tree in Jamaica and tell them fellas they have to pay?
Yeah, I think what we've been seeing lately, at least in St. Vincent, is a lot of trying to increase public awareness. So there've been a lot more commercials on the radio, a lot more ads and so forth, just laying out the benefits of becoming a part of the NIS, and particularly trying to target those persons who are self-employed to say, hey, I mean, this is your business and it's you alone. If anything happened to you, what will happen? How are you going to feed your family? How are you going to support X, Y, and Z? So become a member, start to contribute, etc. And I think I've been seeing an uptick in that kind of promotion lately, at least in the past 3-4 years.
You had to do something, brother, because you had to do something for something to you, as we just say. But that's a big problem that we have in the region as well. And in response to all of these challenges, like we've said, we've seen governments and we've seen countries increase the contribution rates. We've seen countries increase the statutory age at which persons become fully pensionable. And by the way, of course, I don't know if our listeners know, you could take, if you retire early, you have the option of taking a lower pension than if you retire at the fully pensionable age. And that's why we differentiate between a statutory pensionable age and age in terms of retirement. Because if you retire at 65, for example, 60, there's a calculation which they do, which you get some pension, but you don't get the full pension. So it's not to say that you can't retire in many countries. It's not to say that you can't retire before. You can take early retirement, but of course that comes at a cost in terms of the benefits that you receive. And that's why we differentiate in between fully pensionable under the statutory guidelines and so. And that's what we've seen. We've seen all these changes. We've seen in terms of pensions being changed 65, 66, 67. Now you can hear they want to work till we 70 before we could get a pension money. And it come in at the rate at which we're going, it's coming. So we can't be surprised. So then the question then becomes, Jarek, how do we fix it? And we wind on the pod now. How do we fix it? Undoubtedly, there are some difficult decisions that need to be made across the region when it comes to the social security systems. Because if we don't make these difficult decisions, we're really going to end up with social insecurity. And the sooner we begin to address these issues, the better it is. And that's why Barbados now, they've like I said, they had a little PASH conference the other day. Now they're looking to do some public consultations. But I'll tell you this, if you come and ask me if you would want to reduce my benefits and keep my NIS payments the same, I might tell you yes. If you want to come and tell me if you want to reduce my benefits and reduce the pay, I might tell you yes. Because at the end of the day, particularly the younger people, and I'm not saying me necessarily, I'm speaking generally in terms of the younger generation, they are not convinced that it's worth paying all this money into NIS on a monthly basis, particularly with the rising cost of living and inflation and so on over the last year or so, and over the last 5-10 years. So a lot of persons are saying, if this wasn't mandatory, I wasn't paying it. Yeah. And that's how a lot of people feel. So we have to be careful with balancing that.
And you kind of those measured in terms of taking away the benefits are the amount that goes into the contribution rather than any kind of increase in your contribution. Like I think most young persons now would be like,
take the benefits. I good.
Yeah.
And then fellas say, well, when you come pensioner, but you only again, I say, well, I got my life now.
We're crossed the bridge until we get there.
Yeah. And now, because a lot more young persons are investing in things like Sagicor and other retirement plans as well, in recognition of the uncertainty surrounding national insurance, they're more inclined to move away from national insurance almost altogether and put money in a Sagicor or in one of those other insurance or retirement funds type setup, because they feel that their money is more secure there. So that's another thing that the governments and the NIS are going to have to confront as they try to implement reforms. So the first thing, and it's the obvious one in terms of how do we deal with it, Jarek, increase the contribution rates. You're at 5% now, you might increase to 6%, or you might go. Some countries already have it in place that exactly. Some countries already have it in place that the rate is increased annually. Yeah.
Oh, okay.
So they have so I think, but I think this cap for a couple of years is Antigua. One government passed legislation recently where the rate is going to be increased gradually for the next 2 or 3 years or the next 5 years or something. I can't remember which country exactly. I think it's Antigua. I can't quite. So I'm speaking subject to correction here. But that's some countries have already started to institute that. Others have already started doing things in terms of raising the statutory retirement age. That's the other obvious one. So for those countries like Belize where it may be lower, they're going to start to increase it now to reduce the number of pensioners on their books. That's the aim, to reduce the number of pensioners on their books. Now, interestingly, I should also mention, a lot of the public sector workers in the Caribbean have not been doing a contribution to their pension, which is a strange kind of setup which you're trying to fix now, where the government was basically paying, the government was basically paying the employee and the employer
the entire
parts of it. And that's a legacy issue that they've had to contend with, which you're now trying to phase out. So some countries are now saying, as an employee of the government, you have to pay your part now. And so there are a whole barrage of changes that are happening around that. The third one will be freezing or reducing benefits. Some countries have gone the route to saying, listen, we're going to be freezing the benefits. Don't care how much inflation be. Don't come to me and ask me nothing about increasing benefits. It ain't happening. We freeze the benefits for 2 or 3 years with the intention of trying to stabilize the fund. Some have gone the route, rare few have gone the route of saying, let's try to reduce some of the benefits in terms of the payout. They've changed the calculation in terms of the maximum insurable monthly wage and so on to ensure that the pension is slightly lower. So they do a whole host of things with respect to that. Fourthly, some have gone, what we could do is change investment strategy for the reserves. And this is the one that a lot of us are pushing. So less government paper, for example, less social development projects with low returns. At the end of the day, you gotta treat the fund like a business. If me as an individual investor would not make the investment, don't make the NIS do it. That's what a lot of economists and that's what a lot of actuaries are saying. If you as an individual don't see it as a worthwhile investment, or you feel like if your money could be better used elsewhere, why are you making the development the development objective of the NIS override its financial sustainability and viability? So persons are saying, and I know in the case of the Bahamas, recently in the news maybe a week or two ago, there was a big uproar in terms of the investment portfolio of the National Insurance Board in the Bahamas, in terms of how it's investing, the returns it's getting, and the fact that they could be doing significantly better if they were to diversify the portfolio away from government holdings and so on. So that's another big one there as well in terms of changing the investment strategy and the use of the reserves. Yeah. Fifthly, we could also go the route of increasing the participation of individuals. That's a big one. The self-employed individuals. You have to get more persons in the informal economy involved and paying contributions, registering and so on. And Jarek, you already spoke about the ads and so on that people are running. Important. You need to find a way. One of the things that I personally feel, and I wrote on this recently in a book chapter, I said basically, I made the argument that introducing unemployment insurance might actually help with this. Because when you look at the self-employed individuals, now what benefit do they have? Necessarily, they may not count the sick leave, they might think, because at the end of the day, it's your business. If you're sick, you still have to force and fight and so on, right? But the unemployment insurance might be something that gets them in there. Like if things slow, particularly those in the tourism sector, when you have the low period and so on, the slow period and so, and nothing in selling, nothing in moving, but you might have a little unemployment insurance coming in there to help you to at least match a percentage of your income that you would usually have. So, those are things that you could try to do. And of course, a big part of this, like I said, is incorporating the informal economy. And finally, Jadrick, you might want to try as much as possible to reduce the seasonality of employment. Now, for example, in the tourism industry, some workers work for the high season and they're unemployed in the low season, like I just said. So this really means that they're only contributing NIS a period of the year. So this has its own implications in terms of qualifying for pension and other things as well, because that's important from the employee's perspective. Yeah. Because if you're working for a whole year, then it means that the number of contributions that you're making might not meet the statutory requirement to qualify for pension. And so that's an issue in and of itself. So countries like Barbados with unemployment insurance, this usually means that persons, workers would work for part of the year and they would receive unemployment insurance to remain for the off season. Yeah? So if you're able to reduce the seasonality of employment, in other words, if you're better able to market your country in terms of the tourism sector specifically, then you could have a scenario where there might not be an off season. So for example, in the winter season, that's high season. But in the hotter months, you might not see as many tourists from the UK and so on. But if you're able to supplement that, and that's why regional integration or regional cooperation is so important. Because if you're able to supplement that now with travelers from within the region and so on, then you're essentially making it that you're going to have a high season, then you're going to have perhaps a season where it's dominated by regional tourists, but it doesn't go to the low levels of where you are now, where when you're out of season, nothing is going on and nobody can earn. Because those persons who are out of jobs during the low season or the low part of the year, they are not contributing to NIS. And so all of these are little things that we have to think about from a policy perspective in terms of how we tackle this thing, Jarek. And I know I talk plenty in this, that I'm passionate about this topic. And I've been researching it heavily over the last couple of months.
Yeah, no, I'm glad. It's been an education for me, because obviously, even when I think about these things, a lot of these, when we're talking about how to fix it, or when you were talking about how to fix it, maybe only one or two would have jumped out at me, just off the cuff. But obviously, from this discussion, we can see that there are several things that can be put in place, or several measures that different countries are adopting to remedy the situation. So that's something that I think our listeners would appreciate. But if that's it, Delano, could probably go into our next segment, which is what we drinking.
We're raising a glass too. We're drinking to this week, Jarek, boy.
I always going back to sports and these kind of things. So I just we haven't had a podcast for a while. So two major events. Obviously, World Athletics Championships. Were last month, and the Commonwealth Games as well. And I just want to big up everyone in the region, all our countries. A lot more participation, I think, than previous years. A lot more medals, or higher, maybe golds and so, high ranking medals than previous years. And I think that's something good for our region. And let's continue to develop sport and invest in it. And yeah, big up to everybody. So I will definitely drink to that.
Definitely could raise our glasses to that, Jarek. Definitely. And for me, I want to raise my glass to the return of the festivals in the Caribbean, brother. Vinci Mars come off, Spice Mars come off, Crop Over come off, and it was well attended. It seemed to be heavy participation, and the economy is needed. The economy is needed that boost right now to get things back out there. I saw a lot of foreigners coming to the countries. A lot of international tourists came in for the festivals, and so that's been brilliant. So I really just want to raise and I know the next one coming up is Sugar Mass in St. Kitts. I've never done Sugar Mass, and Sugar Mass has always intrigued me, brother, because something about
December.
Something about dancing on Boxing Day and It don't too sit right with me, but I am intent on trying Sugar Mass at some point in time. So that's what I'm raising my glass to, the return of the festivals in the region. We could
definitely raise our glass to that.
Yeah.
Yep. And everyone, that has been another episode of A Lawyer and a Policy Analyst Walk Into a Bar. If you like the merch, drop a comment. Let us know that you want some merch. We could see what we could get out there to you guys. But yeah, importantly, Subscribe wherever you're listening. Follow us wherever you can, especially on YouTube, as we push the whole visual component of this podcast. And thanks again for tuning in. As always, I'm the lawyer, Jared Cummins.
And I'm Delano D'Souza, the policy analyst. Catch you next time.